Welcome back to the neighborhood, boys and girls. Our next guest is Fred Hess from Hess Financial. Also, Fred Hess, client of Envoy Mortgage 2 times, 3 times? I don't remember.
At least 3.
A couple different times. And also fellow Harvest member. So Fred's playing a bunch of roles here. Welcome to the neighborhood, Fred.
Jim?
Awesome. So, real quick story about Fred. Fred was referred to me by a wholesaler that we're mutual friends with. And I did this interview with him on the phone just as a client, asking him questions. And he was talking about trying to refinance his investment property. And he had a couple investment properties. And we got down to his birth date and I was like, what? Did he just tell me he's 22 or 23 years old? And I was thinking in my head, man, I gotta see what's going on with this dude. I'm gonna introduce him to my daughter. She's, somebody like this, he's living with his mom, he's got an investment property, he's doing it. So I was thoroughly impressed. And I don't meet a lot of younger people from this generation that have the drive and the motivation that Fred has. And I come from that. I had a restaurant when I was younger, and it was like so refreshing to have a conversation with someone who had that kind of drive. So I kind of invited him to every single networking thing that I do and all the different things that we have. So that's my pump up of your ego right now. So tell us a little bit about how you got into the position of having rental properties as a young person and having your own business and your own bookkeeping company. How did that all happen, and did it come out of nowhere? What was the story?
Yeah, so I'll start with the real estate side first. So I was always really interested in real estate, my career's in accounting, so always, I want to say financially savvy, always saved a lot of money, but I never really knew how to get into real estate. And really, it was, I don't know if you're going to call it fate or luck, how I really got into it, but I read a book, Rich Dad, Poor Dad, and that book, for some reason, was just like, I need to go buy a property. It was like, from the minute I think I started that book, I don't know, maybe a Friday, and by Saturday it was done. That's really quick for me. And then I was just doing a lot of research online, looking at blogs, all that stuff, Bigger Pockets, if you're in real estate, you've probably seen that. But then, out of luck, I saw a realtor that I was friends with on Facebook post that they had an investor that was offloading their entire portfolio who was interested in buying investment properties. So I said, this is the sign. I just read that book. I was super real estate focused at that point. I had no properties. And I reached out to him and I said, hey, I'm interested. I don't know where to start. I was very lucky where he brought me on. He said that this is one of the better properties in the portfolio. Perfect to start with. Walk me through it. And that was kind of my introduction, and then I was just hooked after that. So that was my first investment. Went on and bought a townhome that I lived in, turned that into an investment, bought another rental property while I was there. Just did my first flip back in December, so it's been kind of rolling ever since then. But definitely trying to maintain like one a year.
And how did the accounting thing come along? Like, were you just always a numbers guy, or?
Definitely always a numbers guy, but it's funny, I almost want to chalk it up to luck and fate again with that one, because when I was 16 years old in high school, looking for my first job. I just wanted to put gas in my car. I would have been fine at like McDonald's, but I was taking my first accounting class at the time too, and my accounting teacher caught wind that I was looking for a job, and she had been teaching for a long time. She had another student that had long time ago graduated, went on and started his own accounting firm. So she reached out to him for me and asked him if he was hiring, using a local guy too. So she connected me with him. He got me into the business at 16. It just kind of clicked from there. I knew, I was good at accounting, but there's more to accounting than just the numbers. It's really a people business. You get to meet all the individuals, all the business owners. That's what I really liked about it, and that's what got me hooked and kind of helped me stick with it.
And for those of you that don't know Fred as well as I do, he really is an accounting dude. Like, we went to Arizona to go see a bunch of speakers, and there was a famous accountant who was there, and Fred was fanboying like I would do for one of my sports heroes from when I was a kid. He was like, I'm gonna really get to talk to Tyler McBrew. We're gonna go. Tyler McBrew. What did he followed you on Facebook and he quoted you or something like that?
Yeah, he shared my, I think it was Instagram, he shared my post, got
shared
to meet
your
him, talk
post.
to him, take pictures with him, it was awesome, total fanboy.
And I was like, you really are that kind of accountant, man. Like he's awesome. So, you just said, hey, if I'm gonna do this, I want to open up my own business. Is that how it went? Or?
Yeah, I mean, I've always been interested in being an entrepreneur, being a business owner. I didn't necessarily know that I wanted to do it, start an accounting firm. I didn't necessarily know that, but I've just always been entrepreneurial, and it just made sense because that's where I started, and it's kind of, it takes my love for being an entrepreneur, and I get to take that and help others build their business. I get to be a piece of, managing their finances, pay less in taxes, and just really contribute to their business's growth, which is what I'm really passionate about.
That's awesome. And we do a couple different things together. How have you changed and evolved over the past year or two as you've gotten older, and I've witnessed you do a ton more marketing and out in the public kind of things. Talk a little bit about that side of you.
Yeah, and that's honestly, I gotta give you 100% credit for that, because I almost want to say, like, if I was ever gonna write a book, there would be like a chapter before gym and after gym, because I've never told you this either, but it completely, meeting you, which was completely coincidental, I just came to you as a client and know if there was gonna be any business or networking out of it, but I kind of didn't really know where my business was going, didn't really know how to run a business, but you kind of opened my eyes to the networking world, introduced me to people, got me into the harvest, got me into the BNI, showed me that this whole world existed, because I had no idea that it even did, and that's been life-changing for me, and that's how I built my business, really.
That's awesome, because I talk about it at our BNI all the time. I've referred a bunch of people to you, and you take care of them all incredibly. And for me, the worst thing in the world is to say, oh, I know a guy, I got a guy, call him, and then 3 days later you get a call back from the person like, yo, your dude's not answering the phone, or he called me and said he'd call me back and he never did. But like, you really take everything seriously, and I've never had anyone call me and say anything other than, thank you so much for introducing me to Fred. And so, have you kind of, I know that you deal with a lot of realtors now, have you kind of pulled a little niche in there to figure out some write-offs or some things for that, or is there a certain target clientele that you have there?
Yeah, I would say the real estate in general is just a really great niche that I've kind of placed myself in, because it really combines two of my passions. I do the real estate investing side, and I do the accounting side, so it just made sense to really combine those two things. And really, what I tell a lot of people is, realtor or not, being a business owner is when you can really start doing advanced tax strategies, whether it be something as complex as the Augusta rule, which is renting your home to yourself.
Yeah.
Tyler McBroom taught me that one.
Mm-hmm. I taught me when I was there too.
Yeah.
Saved me.
Yeah, exactly. That, or taking the Section 179 deduction for your vehicle, you can write off 100% of your car in the first year. That's super crucial for realtors. Can save you a ton of money in taxes. So stuff like that. But,
yeah. And now, do you ever feel any type of negative, I don't know what the right word would be from it, do you ever feel intimidated that you're younger and you're talking to 35, 40, 50-year-old people about tax strategies that are pretty aggressive, like the 179 rule and all these things? Do you ever feel like, I'm scared to say something that aggressive because they're going to think I'm going to get them in trouble, or they're going to get audited and they're screwed, kind of thing?
Yeah, not so much. I would say when I started the business, I mean, I was like 20 or 21 years old when I started the accounting firm, so there was definitely some confidence building that had to go into it, advising people usually twice my age on how to manage their money and their taxes. But that is so far gone at this point, because I'm so confident in what I'm doing.
Right.
I know that I'm doing what's best in their interest, and what most other accountants who've been practicing for 30, 40 years aren't doing for their clients. I know that I'm doing right by them.
Yeah, I remember, I told you, I was talking to my accountant, who's been an accountant for a very long time. Awesome dude, love him, he's my landlord, he's really cool with everything. And I explained to him about the 179 deduction and the full thing with Nikki, my wife. Had a store, we filed joint taxes, blah, blah, blah. And I gave him this whole strategy of what I was gonna do to get all this tax deduction, and he was like, I don't think it's gonna work. And I was like, I'm telling you, man, I heard Tyler McBroom explained it all to me, and he was like, yeah, whatever, dude. He's like, I'm gonna put this all in the system, and it's gonna kick it out, it's gonna reject it. And he put it all through, and I went in, and he was like, it worked, it's all good. You're getting this ridiculous tax return back. Because for me, as a W-2 employee, I don't get tax write-offs. I can't write off mileage. I can't do the Augusta rule. I can't do any of that stuff. But with Nikki owning her own business, my wife, now I get all that stuff back. And I used to have that 5 years ago that I could do those things because they were legitimate, because they were real. My mileage on my car, all the things that I had, and now the standard deductions are bigger, but you lost, as an employee like me, you lost all that.
Yeah.
So what else do you do besides studying Tyler McBroom's Instagram and stuff like that? How do you keep up on all the crazy changes and all the aggressive tactics for tax preparation and tax planning for people?
Yeah, I mean, that's probably the boring part of what I do. That's really just sitting behind a computer and reading, studying, reading all the articles out there, seeing what other accountants, being part of groups that other accountants are in. Of course, Tyler McBroom,
Right.
following his strategies, but yeah, that's just a lot of time commitment on my part to make sure that I'm keeping up and my team's keeping up on it.
Okay, now if you had to give people out there one tip, what's one thing that you constantly find out people miss on their taxes? They're paying way too much taxes because they do this.
I would say that it's just typically not even one particular thing. It's just that they're not being aggressive enough, really.
Right.
And it's when, like you said, when you're a W-2 employee, there's so minimal what you can actually do. But when you're self-employed, it's just you got to get aggressive, and you got to make sure that you're taking all the deductions you're entitled to. You know, being that Section 179 is the big one. Taking advantage of the Augusta rule, so you have that tax-free income, but you're still getting that deduction. So it's just really opening your eyes and being aggressive about that stuff.
Okay, so now I'm going to ask you some geek tax accounting questions.
Right.
So the Section 179 rule that we had, you buy a $60,000 car, you take a $60,000 deduction from it one time, correct?
Yes, so you get the business use percentage is taken. You can take it in year one. So if you buy a car for 60, or let's just use 100,000 because
Right.
that's a simple number. If you use it 80% for business use, you can take an $80,000 deduction in year one. So that'll reduce your taxable income for the year by $80,000 in that scenario.
Now, if your car didn't qualify for the 6,000 pound deduction and you had installment debt where you paid $700 a month, could you deduct the $700 a month payment from your, if it was 100% for business?
So it doesn't, you don't actually, there's two different ways you can do it. You don't actually deduct your car payment, because it doesn't matter. You could buy the car in cash, you could finance it, you can acquire the car however you want as long as you own it. You can still take the same write-off. So even if you finance it, you can still write off 100%.
What if it's a lease?
Can't do it with lease.
Lease, you could write off the payment as a
Lease is the
business.
payment.
Okay.
Yes, lease you can write off the payment. When you're talking about ownership in the vehicle, you have two options. You can do the standard mileage deduction, which is, they just increased it because of inflation. I think 63.5 cents per business mile would be a write-off. Or usually it works out better if you do the actual dollar for dollar deduction, which is if you take all your fuel, repair, maintenance, insurance, all the costs that go into owning your car, and then you can write off again if you use your car 80% for business use. You can take 80% of the total amount you paid for all of those items and write it off.
Now, if you do the full 1 year deduction, am I correct? If you sell that vehicle in 5 years, that counts as income?
Yes, so since you claimed the 100% depreciation on the vehicle, whatever you resell the vehicle as, your new cost basis will be zero because you already depreciated it down to zero. So if you resell it for $10,000, you would have to claim $10,000 back as income.
As income, all right, cool. I like all those strategies, I like them. All right, little bit of rental property strategy, little bit of stuff because I geek out on that stuff sometimes too. You have a business, you have a windfall year, you make $300,000 profit in your business,
Okay.
and you want to acquire a fourplex as a rental property. Coincidentally, the fourplex is $300,000.
Mhm.
Can you purchase the building for $300,000 and wash the $300,000 of income?
So it's not a wash. When you're purchasing a rental property, it has a useful life, which with the IRS is 25 years. So you have to take the $300,000, reduce the cost of the land, because there's it's allocated a portion to the land, a portion to the structure. So whatever the structure's portion is, that gets divided over 25 years, and you get a deduction for each of those 25 years. Now, where you can get more aggressive is if you bought a fourplex for $200,000, let's say, and then that extra $100,000 you put it in the renovations. You can do the same thing like you did with the vehicle. Take 100% of those renovations in the year that you did them.
Okay.
So that way you could get a $100,000 deduction in the year that you bought it.
From that to renovate it. Okay. Now, a loan is never income, correct?
Correct.
A loan, no matter how you live it, whether you're talking about life insurance or a loan from a building. So if you bought a building for $100,000, renovated it with $500,000, you could take the $500,000 loss from the renovations as a one-time deduction, then go to the bank and borrow $500,000, but that $500,000 that you borrowed is not income, and you can spend that however you wanted to, tax-free.
Correct, correct, and that's a strategy that I did personally, especially with all the home appreciation from COVID. If you had rental properties or any investment properties, they likely went up in value, and you can cash out, refinance all that new equity that you just built into this house from the appreciation, and that's tax-free money. You can roll that into new properties and get new write-offs from that, and also be producing more income.
Yeah, that's a lot of stuff right
Yeah.
there. That is, like I said, I had a business when I was really young. I had a restaurant when I was 17, 18, but I never understood how rich people use money. Like I was educated to believe that if you work hard, you'll get rich. And that's not really always the answer. The answer is if you learn how to use money and work the system in the way that rich people work the system, that's how you make the money.
100%.
Yeah. And I've learned a bunch of stuff in just the past couple of years about that and the different things. And I never knew that a loan wasn't income, and you can continuously roll and roll and roll and buy, and the assets appreciate. Now, the only problem with that is, if I'm correct, as acquiring, at some point in time, the tax bill is going to come due. If you have $3 million in properties and you pass away.
Yeah, really, and it's almost a deferment strategy is really what the tax strategy is, and at some point, all these properties that you're depreciating and that are giving you all these tax deductions and tax benefits, they're going to have to be sold eventually, whether it's by you, whether it's by someone who's inheriting them, but down the line, eventually those properties are going to be sold, and that's really when you'll be paying taxes.
Awesome. So Fred, if anybody out there is watching wants to get in touch with you, how's the best way to get you on there?
You can find me on social media, absolutely, Facebook, Instagram, or find my website, hessfinancial.us, and reach out to us directly on there.
What's your email address, Fred?
Email is fred@hessfinancial.us.
Awesome, Fred. Thanks for coming in.
Of course.
Have a great night. We'll be right back with the last guest on Mr. Mortgage's Neighborhood.